Okay, well, here's video number 2. I ran out of space on my USB, and so I'm going to catch you back up. I was a few minutes behind on knowing that I'd done that. I'd stopped recording. So when I left you, we were writing down that we had $1 par value stock. And again, the book is telling us all this. And then on January 1st, 2018, we had already, all from the beginning of the business to January 1st, 2018, or whatever the current year is, issued 74,000 shares. Okay, so there's our 74,000. During the current year, we decided to issue 1,000 more shares. So during this current year, we issued 1,000 more shares. And that means that the balance, our new balance on the number of shares out there, is the 75,000. Okay. So there's our capital stock section. You can pause this, get all that written in. Again, that's just pretty much coming from the information in the book. The other section is our retained earnings. Okay. The beginning balance for this year on our retained earnings actually comes from the adjusted trial balance, at least in the working together. There's a lot of different places you might find this information. Okay, and it hasn't changed throughout the year because retained earnings is basically the collection of each year's net income. Okay, and so what we're doing right now is we're doing the end of year activities, end of year work, and this is when the time of the year that we actually add to retained earnings. So when we look at our adjusted trial balance, this number that we see is actually been sitting there all year. Okay, unless we've done this work other times, but right now we're just talking about a year's worth of work. Okay. So we just need to take that number, which is actually our beginning balance for the year. So the 165,073.83. Okay, and again, that's coming from our adjusted trial balance. Then we want to take our net income, and our net income after taxes. Okay, so this is going to be after taxes. And really, that comes from right here. Okay? Because here's our before, then we take out the taxes, then our after taxes. Okay? So that number is the 63,189. $54. Okay. And yeah, it's coming off of our income statement. Okay. Less dividends declared during the year. All right, so this isn't stock issued. This is dividends that we're going to share throughout the year. Again, this will come from, I think they give it to you in the book, but it's also showing it to you here, the 16,000. So we're paying out $16,000 to our shareholders. So here's the net income. This is what we're giving to our shareholders. Here's our net increase in retained earnings. Okay, so those two, subtract that. That equals this, 47,189, 54. Okay, I guess I can do a plus and an equal. got that number. We're going to subtract these two, gives us this number. This was our beginning balance in retained earnings. This is going to be our increase in retained earnings for this year, which gives us our balance, 212, 263, 37. Okay, and that's this plus this equals this. Okay, the beginning balance plus the new net increase. Okay, not just net income, because it's net income minus dividends, will give us that number. And then these two added together is our total equity. So 75,000 plus 212 is 287, 263. 37. Okay. And we'll double rule there. Okay, so this plus this equals this. And like I said, make notes how you need it to, how you can remember what you're adding. If you need to add some extra notes on there, that is very good. Okay, so we've done the income statement, we've done the stockholders' equity. So the next page is 4.3, working together, the balance sheet. All right. So, moving to the balance sheet. This was one, I'm not going to write all these numbers down. And I'm not going to make you do that for the working together. You're going to have to do it for the other ones, but you're not going to have to do it for the working together. So balance sheet. The balance sheet is to make sure that assets equals liability plus owner's equity. Okay? We want to make sure that our accounting equation is in balance. Okay? And really, all of this comes from, whoops, I need to zoom out a little bit, don't I? It doesn't like it. Okay, well, I'll just have to move it up and down. From your adjusted trial balance. Okay, but this down here is going to come from your statement of equity, of stockholders' equity. Okay, because it's related to, and it shows you, right? Assets, liabilities, stockholders' equity. That's got to come from that statement. All right, sample, page 114. Again, if you need the layout, they've already got all the words in there for you, so that saves you a ton of time. Just remember that when you see less, you'll need to subtract. Okay? Again, you're going to really need to use page 114 as your go by. Let me see if there's anything. So total current assets. Again, remember we have that equation. That equation is what we want to see in this last column. Okay? So total current assets need to be over here. Total plant assets needs to be over here. Total assets needs to be over here. Okay? And then we'll go ahead and give us a double rule. Okay, there's our assets. Liabilities, total liabilities, we'll put over here. Everything else, those will be in this column. Let's see, I could go ahead and mark that. Easy enough. Okay, I could mark these. I can't decide if that'll be more confusing or not. So, let's say that because there's a calculation here, these will go in this side. Of course, here we have less. So these will go in the first column. Less. These will go in the first column. Okay. So, you know, these are in the last column. These are in the first column. Everything else. So when you do this math, you'll move it over to this column. Do this math, the answer's over here. Do this math, the answer's over here. Okay. Oh, I did that wrong. Can y'all fix that? Darn it, sorry. That's why I hate using pen, because I make mistakes. All right. So stockholders' equity. Let's see if I can get all the way down here. Again, statement of stockholders' equity is where it's coming from. Basically, we're going to do these two. The two sections, just the totals. Okay, and then we'll put this total over here. And then this, of course, is your grand total, right? I'm just going to do that in a different color. I'll just highlight it in a second. So here's your total liabilities and your equity, and your total assets, and your total liabilities. Okay. So again, use your sample page, page 114. All these numbers coming from the adjusted trial balance. These numbers coming from the statement of stockholders' equity. Okay, and you will need to do percent of assets. Okay, percent of assets, but really, here's your whole. This is going to be the whole. Total assets. But you're also going to do percent. So this is kind of one section. Okay, there's the assets, right? Equals liability and owner's equity. So then this is the next section. So total stockholders is going to be a whole. Okay, and then you'll do that one, that one, that one, and that one. Those are your parts divided by the whole to get your percentages. And again, just looking at your sample will help you with that too. All right, one more. Okay, hopefully I've still got this space. This is a statement of cash flows. What's coming in, what's going out. A lot of this information is coming from your book. So number 3 was to complete the balance sheet. We did that. We did the vertical analysis ratios. Then number 4, use following information to complete the statement of cash flows. Foley begins the fiscal year with a cash balance of 2375.14. We see, let me bring this over here. Where we've got cash coming from, we've got cash payments for. Some of these may be in different categories, but this is where you're getting all of this information. Okay? And yeah, pretty much everything for this is coming from the book. Okay? So the very first thing it wants is cash receipts from customer. Okay? So that means it's sales to the customer. 697018. And then cash payments for. The thing is that we've got it divided into operating activities, investing activities, and financing activities. Okay? So again, this will be helpful to know kind of what category things are falling into. Okay? Oh, a couple other things. We are going to be using parentheses on this statement. Okay? And so that means that it's negative. It's money going out. Cash going out will be negative. Okay, cash coming in will be positive. And the idea of this is to summarize cash receipts and cash payments. And your sample is page 115. All right, so we've got the operating activities, we've got the investing activities, and we've got the financing activities. Okay, cash receipts from the customers. Again, the book gives us that, telling us that sales to customers are 697. Are we on here? 697 018 61. Cash payments 4. Now we got to think about what are operating expenses. Okay, dividends. That's not operating. That's financing. Okay, income taxes. Okay, that's based on our operating income, right? The net income we've made. So we do want to put that one in. We're going to put in inventory purchases. We're going to put in insurance. Okay. I'm not really sure their order, what the importance of their order is. So let's just start with this. So first one we come to is income taxes. Okay, so this is operating 14041, or excuse me, 14048, 17. Then insurance. Okay, we can't operate without insurance. So we had to pay out for insurance, 16,000. Inventory purchases, that was cash going out. If we're going to sell it, we got to buy it. Inventory purchases 309,481. 36. Other operating expenses, don't know what they are, but it says that it's operating. $37,104. .74. Let's see what else. Purchase of equipment. Well, because equipment is an asset that can be bought and sold, we're going to put that in investing. Rent, we'll put that up here with operating.